All right, let's jump right into this explainer. Today, we're not just looking at SAP Convergent invoicing as some dry, dense manual. We're going to treat it like a master architect's blueprint for building a rock-solid financial system. If you've ever felt totally overwhelmed by the sheer volume of nodes in the SAP Implementation Guide, SPRO, trust me, you aren't alone. But today, we're cutting through the noise. We're going to look at the exact configuration paths that make this engine run, translating those system settings into a beautifully structured, highly functional billing architecture. To construct this system, we've got a clear agenda to get through. First, core invoicing process control. Then, scenario-specific invoicing types. Third, assigning invoicing document types. Fourth, clearing and account maintenance. And finally, configuring deferred revenue settings. Let's get to work. Section 1, core invoicing process control, or as I like to call it, pouring the foundation. Think of this level 1 control as pouring the actual concrete for your billing architecture. If you're navigating SPRO, your path looks like this: financial accounting new, down into contract accounts receivable and payable, convergent invoicing, invoicing processes, and finally define invoicing processes. This exact path is where the master rules are born. If this foundation isn't perfectly set, well, nothing you build on top of it is going to stand. And when you execute that step in the SAP GUI, you get this fantastic bird's-eye view of your invoicing processes. Now, the main task here isn't just naming a process. It's defining exactly which categories of source documents your system is even allowed to look at. At this foundational level, you're doing the heavy lifting that dictates system behavior. You're assigning source document categories, you're specifying grouping variants, which literally tells the system how to consolidate multiple billing documents into a single invoice. And super importantly, you're assigning your invoicing functions. Right here is where you decide what is absolutely mandatory for the system to process and what's just optional. So the crucial point is right here in the selection control view. This is where you explicitly tell the system, hey, grab these source documents. For example, you map INV GBI for your standard convergent invoicing billing documents, or maybe VBRK if you're pulling in sales and distribution billing documents. If it's not selected here, no way it's getting invoiced. It's really that simple and, honestly, that powerful. Moving right along to Section 2, Scenario-Specific Control. This is where we start building the framing. This table perfectly captures the distinct difference between the strict, mandatory foundation of Level 1 and the highly flexible scenario framing of Level 2. While Level 1 lays down those broad, non-negotiable rules, Level 2 uses invoicing types and categories to say, okay, under these specific conditions, let's go ahead and activate those optional functions we just talked about. It's all about specialized, scenario-specific behavior. To configure this framing, you're going to branch off at the very end of that same SPRO path we were just in. You'll select Define Invoicing Types to map your processes and set the activation status for those optional functions, and then use Define Invoicing Categories to segment your customer base. And these categories, they aren't just set and forgotten in SPRO. You enter them directly into the customer's contract account master record. This right here is what drives that specialized invoicing behavior. It's how your system inherently knows, during a massive invoice run, to treat a residential account entirely differently than a commercial one. All right, Section 3, Assigning Document Types. Time to install the utilities. Every building needs water and electricity to function, right? Well, your system needs these utility document types to actually record transactions. Navigating through the Documents submenu, you need to configure your invoicing document types in Posting Area 2600, your posting document types in Area 2605, and of course, your basic settings for invoicing reversal. Because let's be real, mistakes happen, and you absolutely need a clean way to roll them back. Now, what's really cool about this view is how you can clearly see the utilities mapping back to the framing. Your invoicing types on the left, things like credit memos or return orders, are directly mapped to the generated invoicing documents on the right. It's this seamless translation of a real-world business scenario into a concrete, fully auditable financial document. Which brings us to Section 4, Clearing Control and Account Maintenance. We are finishing the interior, Part 1. Before we click through any more menus, we really need to define clearing control. Think of it as the brain of your account maintenance. It's the automated, rule-based framework that decides exactly how incoming payments are applied against open invoices and how credit balances are intelligently set off. It literally saves your accounting team countless hours of manual reconciliation. To build this brain, You actually step out of the Convergent invoicing node entirely. You're going to jump into basic functions, go into open item management, and expand clearing control. Here, you're not just defining clearing variants. You're also defining clearing categories and specifications for clearing types to set defaults for incoming payments. It really highlights just how deeply Convergent invoicing integrates with the broader FICA landscape. Inside these paths, your key activities get incredibly precise. You're setting up clearing steps, sorting rules, and grouping strings based on main and sub-transactions. But the real magic is assigning variants to specific clearing types. For instance, you might map default behaviors to type 19 for a manual incoming payment, or type 03 when your team is doing manual account maintenance. You're essentially teaching the system how to think exactly like your very best accountant. And finally, Section 5, Configuring Deferred Revenue Settings. Finishing the interior, Part 2. If you work with subscriptions, prepaid services, or honestly any scenario where you collect cash before delivering the service, this final task is absolutely crucial for compliance. Under business transactions, you'll find deferred revenue postings. This is where you map your deferred revenue to the actual revenue GL accounts, and you choose the specific FICA document type that's going to be used when those transfer postings occur. But I really want to draw your attention right here, because FICA Event 2615 is arguably the most important part of this entire deferred revenue configuration. Everything we've built so far feeds directly into this specific event. Think of Event 2615 as your central revenue recognition engine. At runtime, it receives all your billing, invoicing, and FICA data. It takes all those inputs, processes them, and churns out a final revenue recognition schedule with exact dates and amounts. It then stores that schedule safely in table FKKDEFREV, which your team will later process using the Mass Activity Transaction FPDR. It's literally automated compliance built right into the invoicing flow. So when you view SAP configuration not just as a bunch of isolated clicks, but as a fully interconnected blueprint, from those level 1 process controls all the way down to the specific logic of Event 2615, you really begin to see the bigger picture. I'll leave you with this thought to consider. As your business models evolve and inevitably become more complex, is your core invoicing foundation actually strong enough to support the revenue recognition rules of tomorrow? Thanks for exploring this blueprint with me.